Good evening, everybody. Good evening, everybody. Good evening, everybody. Good evening, everybody. My apologies for being late. I do apologize. I was held up a bit. We have a bit of a traffic issue and rain here in South Africa. I do apologize. Good evening, good evening, good evening. Welcome to yet another live trading session with myself, Isaac Easy. I welcome you guys all. Um, we are now live. We are now live. Um, Please just be careful of. Right, just be careful of. I see there's a bit of. Okay. All right, guys. All right, guys. Yes, welcome to yet another live trading session with myself, Isaac Easy. I greet you all. I hope you guys are doing good. I hope you guys are keeping well. I hope you guys are keeping warm in this weather. I greet you all from wherever you are. Good morning, good day, good evening, depending on where in the world you are. I am chilling in South Africa, Johannesburg. And today we're going to be talking Forex trading. I believe that's why you are here. I just want to say before we begin, please stay tuned until the end of the session because at the end of the session, I want you to have, please listen to me, I want you to have a different perspective of the market. I want you to increase your knowledge and I want you to increase your profitability by the end of this session. That is my goal. That is my vision for you. And before I begin, I just want to say any opinions, any news research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. All right, let's get onto it. And as I said at the end of the session, I will be giving you guys 100% deposit bonus after you attend this lesson. I'm going to give you guys a promo code that will get you 100% bonus to double your deposit and maximize your profit potential. All right, I will share the promo code at the end of this session. So make sure that you stay tuned up until the end of this session. All right, so just to give you guys a bit of an idea of what we're going to be discussing today, we're going to be discussing price cycle. I'm going to be discussing price cycle with key levels. I'm going to give you guys a bit of background of how the market moves. I'm going to give you guys a bit of a background of the characteristics of the market, what to look out for whenever you're trading the market, and how to get entries using price cycle and key levels. That's what we're going to be discussing today. I'm going to dive in deeper from where we left off last week. So we're going to be discussing price cycle. We're going to be discussing key levels. Main idea is for you to be able to get what you call good entries whenever you are trading. The idea of today's session is so that you get good entries, right? At the end of this session, you should be able to identify where you should be taking, better entries with little to no drawdown. That is the idea. That is the goal of today's session. So I want you guys to stay with me until the end of the session so that we are on the same we are on the same page. All right, just want to greet you guys and please do let me know where you're from. Please let me know where you are from, where you are tuning in from. Please let me know where you are tuning in from. Which country are you tuning in from? Are you a beginner or are you a what do you call? Are you an advanced trader? Please do let me know your name, your country, and where you are, which city, and whether you are a professional trader, you're an advanced trader, or you are just a beginner and you have no idea what forex trading is, so I can know which audience I am talking to today. All right, are you guys with me? All right, and as we engage throughout the session. I would like you guys to communicate with me in the comment section. Comment if you've had a similar experience, if you had something totally different, or you thinking what I'm saying, you have a different point of view. Please do engage with me. I enjoy it when I engage with people. The idea of this so that I can teach you guys how to, at the end of this session, I want you guys to learn how to spot entries. I want you guys to learn on how to get better entries whenever you're trading in the market. So please do let me know in the comment section where you are tuning in from and whether you're an advanced, a beginner, or intermediate trader. All right. All right. Are you guys with me on that one? Okay, great. We have Gamir Brown all the way from South Africa. Shout out. Where in South Africa are you from? I'm from South Africa as well, by the way. All right. Please, yes, do let me know where in South Africa are you from? Which country? Are you a beginner or you're an intermediate trader? You're an advanced trader? Please do let me know. All right. Before we get into it, I just want to do a bit of introduction for those of you that is your first time here. I'm happy that you are here. I'm happy that you are here to learn from me. And I hope by the end of today's session, you will be able to get better entries in the market. You'll be able to make better, I don't want to use the word prediction, but you make better speculations when it comes to assessing and analyzing the market so you can have more profitable trades than losing trades and make sure that you grow in your trading career. That is my idea. All right. So just to give you guys a bit of background about myself, my name is Isaac Izy. I'm a professional trader with 10 years of experience. I am the founder of Flexi Forex College, and over the years we have trained over 5,000 students, and we have been a part of so many success stories in South African forex trading industry. And I hope by the end of this session, I will also be a part of your success story. All right. And over the years, we've held over 300 forex seminars throughout the Southern African region, in Mozambique, in Namibia, in South Africa, in Botswana, and all these countries. And hopefully, we'll be growing into the Western and Central African regions. All right. And our goal is to provide new traders with proven strategies and empower them to succeed holistically and not just in finances only. That is our goal as a company. That is my goal as an individual. All right. So let's get right down to it. Let's get down right down to it. All right. I see we have Clive from Heidelberg, Gauteng. We have Kwako all the way from the Eastern Cape, East London. I first went to East London when I was in primary school. I think, believe that was 2003 or 2002. Lovely place, lovely place. Watched you at the Radisson. Oh, that's great, man. That was the seminar that we did. And by the way, if you are from South Africa, I just want to say we are hosting a live seminar, in-person seminar on the 9th of December with Octa in Johannesburg Center. 9th of December, 9th of December in Johannesburg Center. Details will be on my Instagram. Details will be sent in the Telegram channel. So make sure that you come and attend this free seminar courtesy of Octa. Please make sure that you don't miss that. Let us come and engage. It's going to be a beautiful, beautiful seminar. We're going to learn quite a lot, and there's going to be massive giveaways as well. So make sure that you don't miss that. All right. We have Esther all the way. This is my first time joining your live. I'm Esther from Nigeria. Welcome, Esther. I've been following Forex for 10 years and feel it's time to start trading. Awesome. You are at the right place. Okay, guys, let's get right down to it. As I said, today we're going to discuss what price cycle. All right, we're going to discuss price cycle. And what do I mean by price cycle? Basically, it's the phases of the market. All right, we have Ulebohem moving all the way from Krugersdorp and a beginner. Great, at the right place. All right, so guys, I'm going to give you a chance at the end of the session. I'm going to give you a chance at the end of the session to ask me questions. So if you do have any questions, please make sure that you put them aside. And at the end of the session, there's going to be a Q&A session. Ask me questions, and then we're going to be talking. I'm going to be answering and make sure that you understand better. And as I said, at the end of the session, the idea for me is so that you are able to spot good entries in the market. That's what I want you to do. And before I give you the juice of that, I want you to understand the market holistically. So what is the characteristics of the market? And I say a price generally moves in 4 cycles or 4 phases. All right. And the 4 phases of price cycle are consolidation phase, the expansion phase, the retracement phase, and the reversal phase. I want to make sure that you guys understand all of this. All right, this is very, very important because this is the foundation. Once you understand this as your foundation and everything, we put everything together, that everything that we have taught, everything that we've discussed in our previous session, it's gonna make so much sense. All right, and I want you guys to stay with me. All right, are we together? All right, now let's first get to the first one, the consolidation phase. What is the consolidation phase? All right, the consolidation phase is when prices ranging between 2 prices. All right, ranging between 2 prices. All right, it is when prices moving sideways. All right, the market is neither bullish nor bearish. This means if you've attended any of my previous session, I've taught about trends. We understand that we have the uptrend, we understand that we have the downtrend, and we understand that we have the ranging trend. The uptrend is when the market is bullish. That means the market is going up. The downtrend is when the market is going down. The trend is bearish. All right. Now the ranging trade or the consolidation phase is when the market moves upside. There is an indecision between the bulls and the bears. There is an indecision between the buyers and the sellers. That means the market is neither going up nor going down. It's just going sideways. It's just moving into between just 2 prices, and we're going to do an example of that. Basically, let's look at what is happening right now on GBPAUD, the Great British Pound and the Australian dollar. This is what we mean by a consolidation phase. This is when the market is not going up, down, it's just moving sideways. All right, are you guys with me? Do you guys understand that? If you do understand, please just engage with me in the comment section. Just say yes, we do understand the consolidation phase. The market is neither going up, the market is neither going down. It's just moving sideways. You see, it's moving between this high and this low. The market is just consolidating there. That's what we call the consolidation phase. All right, that's the first phase of the market. The second phase of the market that that will happen after the expansion phase. Okay, before we go to the expansion phase, I want us to have a look at something. Right now, when the market is moving, right, let me just quickly do that. When the market is consolidating, right, we have what we call the equilibrium. All right, the equilibrium, which is basically just the midpoint of that consolidation, the 50% of that consolidation. So it means from the high to the low, the midpoint of that consolidation is what we call equilibrium. Are you guys with me? Please, if you are with me, do comment in the comment section to say we do understand what a consolidation phase is, and the equilibrium again is just the midpoint of that consolidation. All right, moving on to the next one. We understand we have the first phase, which is the consolidation phase. The expansion phase, however, is what will happen usually after the consolidation phase. It's when price moves quickly from a level of equilibrium. All right, it's when the price breaks out of a consolidation. All right, it's when price moves quickly from a level of equilibrium. It's when price breaks out of a consolidation. All right, is usually what we refer to as the impulsive move, and it's important that you understand this so that you are able to spot good entries. Are you with me? It's important that you understand these phases so that you are able to get better entries in the market that have little to no drawdown at all. Are you with me? All right. Now we understand that after the consolidation phase, we'll have the expansion phase. That's when price moves quickly from the equilibrium. It's when price breaks out of the consolidation. And we did discuss that the equilibrium is the 50% of the high and the low of the consolidation area. The equilibrium is 50% of the high and the low of the consolidation area. All right. And it's important to note that the expansion phase or the breakout of the consolidation will usually happen on or near a key level. All right, if it's your first time here, please don't worry. I'm gonna get to explaining what key levels are and how to use them. I'm going to explain that for you. So please make sure that you stay tuned. And these key levels are the ones that we're going to use for our entries. They are very, very important because that's where we take our entries. That's where we take our sniper entries in the market. Are you guys with me? All right, we understand the expansion phase. Let's quickly go into the chart. I'm going to go back into history so we can look at a consolidation a bit, and then we will see. All right, so there was a consolidation here just now. Right, there's a bit of a consolidation. We had this price go into the downside. All right, price go into the downside, so that is the expansion phase. All right, so we had our consolidation, the market broke out, we have the expansion phase. Do you guys, it's the impulse move to the downside. Do you guys see that? So when looking at support and resistance, how far should you go back on the charts? All right, we're gonna get to discuss support and resistance, which are our key levels. All right, we're using our key levels as support and resistance, so please make sure that you stay with me, and then we're gonna get to the key levels. Do you guys understand the consolidation phase and the expansion phase? Can somebody please confirm for me in the comment section? The expansion phase, as we said, will happen after consolidation when price move to the upside or to the downside, which is basically just the breakout of the consolidation phase. Are you with me? Please confirm if you do understand the expansion phase or the impulse phase. All right. It's when price moves quickly from a level of equilibrium. It's when price breaks out of a consolidation phase, and eventually there will be a break of structure. We want to look for a break of structure, or we might still be stuck in a higher time frame consolidation. So we want to look at a break of structure either to the upside or to the downside whenever we are looking at the, and as we can see from this example here, we had a break of structure over there. There was a market broke this previous low to show us that we're still in a downtrend. Are you guys with me? So we need to see that as another confirmation of the expansion phase. Now, after the expansion phase, what will happen? We'll have what we call the retracement phase. We'll have what we call the retracement phase or the pullback phase. All right. This is where now you want to start setting up your traps in the market. So you want to prepare yourself to enter the market. This is now when you want to enter in the market. This is the phase that you start looking at, paying attention to, staying closer to your laptop. All right, this is what you want to look at. So when the retracement phase is when price pulls back inside the recently created price range. All right, and what do I mean by price range? Price range is expansion out of the area of consolidation. Let's go back to our example. We have a consolidation phase there, we have an expansion. So from here till there, this is what we refer to as price range. All right, price range. Now a retracement is when price goes back inside the price range. So the market is retracing. All right, price pulls back to fill any inefficiency to allow both buyers and sellers fair opportunity to liquidate the market. All right, after the pullback, market continues in the intended direction. All right, so we understand by the authority of just what we just read now, we have a consolidation, an expansion, a retracement to fill the inefficiency here, and the market will continue into the intended direction. This is what now we refer to as the retracement phase. The market is pulling back to fill any inefficiencies or imbalances in the market. All right, are you guys with me? Do you guys understand this? Do you guys understand what a retracement phase is? Can somebody please confirm in the comment section if you do understand what the the retracement phase is, or the pullback phase? Understand, we've discussed this when we're discussing trends. When the market is creating higher lows and higher highs, there will be pullbacks, there will be retracement. That's when you want to start looking at taking entries. All right, you guys understand it? Do you understand? Please explain. Please write in the comment section, engage with me. Do let me know if you do understand what I am. If you have any questions regarding the retracement phase, please do let me know so we can what is this word, so we can just quickly brush it up for you, make sure that you understand before we move on to the next phase, which is the most important one, because that's when you start taking entries in the market. All right, and again, just a reminder, please make sure that you join our Telegram channel. The link is in the comment section. Please make sure that you do join the Telegram channel. That's where we share trading ideas. That's where we share psychology tips. That's where we share everything, free educational content. Everything is explained in the Telegram channel. The link is in the comment section. Please check the link in the comment section and make sure that you do join and you do not miss out. All right, again, just to recap, retracement phase is when price pulls back inside the recently created price range, and by price range we mean the expansion outside of the area of consolidation. It's when price pulls back to fill in any inefficiencies to allow both buyers and sellers fair opportunity to liquidate the market. Stay tuned. There's gonna be a session where I'm going to discuss liquidity, so you can understand what liquidity is in the market and why is it important for both buyers and sellers to have opportunity to liquidate the market. We will discuss that in one of our future webinars. All right, after the pullback, the market continues in the intended direction. Now you want to trade in the intended direction. So if the price range is to the downside, you want to be looking for sell opportunities, and if the price range is to the upside, you want to be looking for buying opportunities. Do we all understand retracement phase before I move on to the next one? I see Esther says yeah, I see Live says yeah. That's what's happening. That's what's happening. Let's move on. Let's move on to the reversal phase, which is one of the most important phases for you and I as retail traders, because this is where we want to take our entries. All right, when price moves in the opposite direction from what the current market direction was moving in, so from a downtrend to an uptrend, and from an uptrend to a downtrend. Now this is a reversal phase, and as I said, let's just quickly go to the chart. We'll have our consolidation, we'll have the expansion phase, we'll have the retracement, and then we will have what? The reversal. All right, we will have a reversal to the downside. That's what we're looking for, all right, to go to the downside. If you had attended last week session, right, you will remember that we had our consolidation and we had anticipated to take sell entries from that price over there to the next key level there, which was 90900. All right, 1.90900. So we had a consolidation, we had an expansion, we had a retracement, and we took our sells here at 91750, which was also our equilibrium, and we went to the downside to the take profit 90900 over there in the market. When they failed to break this low and then it went all the way up, there is a consolidation again here, so we want to look at what the market is going to do. So chances are since the market has broken this previous high over there, so we want to see what's going to happen next. So although we still have this high that's not been broken, all right, obviously the market came into that order block there. It's a 1 hour order block, all right. It's still sitting below the 1 hour order block, so chances are we might still go to the downside and take out this liquidity over here, this trend line liquidity over here to the downside, and eventually break out this. So what will happen here will let us know exactly where the market is gonna go. So again, we have a consolidation, so we want to see what the market is going to do. If the market breaks to the upside and eventually breaks the midpoint of that what is the best time frame to check this phases? This you can, depending on what type of a trader you are, you can check this on smaller time frames and higher time frames, but it's more important to check them on the higher time frames, because then it gives you an overall direction of the market. All right, it gives you an overall direction because on a higher time frame you see the bigger picture, although in a smaller time frame you can still get them. Let's see if we can quickly go to a 5-minute and see if we are able to spot yes. Okay, let's see over here. We had our consolidation phase, we had our expansion phase, we had our equilibrium over there, right? We had our equilibrium somewhere over there. If it's at a key level, we use it 4000. That's That's a key level right there. All right. Consolidation, expansion, retracement, reversal to the downside. You guys see that even on a 5 minute. So if you're checking this on a 5 minutes, you would have taken your sell entries over here, and you would have taken your take profit somewhere at that price over there. But also if you check 9099, it's our key level there. You would have taken your take profits over there. See where the entries is. Just look at the drawdown. See how small that drawdown is. Very, very small. All right. So this works on all time frames, but the higher the time frame, the better the speculation. The higher the time frame, the better the speculation. I usually work on a 1 hour time frame. Time frame. All right. So as I said, for now on GBP, Great British Pound, and the Australian dollar, we are looking for a breakout of this consolidation. All right. And then to the upside, or either to the downside, we look for an expansion. After the expansion, we look for a retracement. After the retracement, we look for the reversal, and that's where we start taking our entry. So I would say if we break to the downside, this is where we want to take our entry. So what the market might do is it will break out of this, all right, retrace a bit to around that area over there, and eventually we will continue with our downtrend to the downside. All right. Thank you, well explained. Thank you, Clive. Thank you for engaging with me. You see, so this is what might happen. So we might look at that possibility over there, of which I'm leaning more to that side because of this break of structure over there. All right, and because we are now failing to break this order block there on the 1 hour time frame. All right. So this is what I'm anticipating might happen. Again, if we break out to the upside, what will happen is I want to see us taking out this high over there to confirm that we are now going to the we are now in an uptrend. So what I want to see happen is this expansion to the upside. All right, and then I want to see a retracement to that price over there, and then once I get a retracement, I wait for my reversal to begin from there to the upside. Right, but I'm leaning more towards this scenario than that one. Are you guys with me? I'm leaning more to the sell than to the buy. So we will see what the market is going to do, which is why patience is very important for you as a trader. All right, so this is a scenario what might happen on the Great British Pound and the Australian dollar. So let's keep an eye on that one. All right, and it's important that, guys, make sure that whenever I do analysis, pay attention to them, all right, so that you can take those trades, monitor them, so we can also be profitable. Like I said, last week, I gave out the sell over there, all right, the market was somewhere here. The market got to our sell price, and it got to our TP price over there, all right, so we would have taken that nice trade over here. Are you guys with me? So please, let's pay attention to these trades. Okay, now let's move on. We do understand reversal phase. Do we all get it? Do we all understand reversal phase? Can somebody please confirm for me in the comment section if you do understand the reversal phase? All right. Okay, this is actually what happened last week. All right, so just to give you guys, this is here. All right, just so you can see it. This is there, that, all right, and then we had the expansion, which is that, and then we had the retracement. The market, remember I said the market was somewhere here. All right, the market was somewhere here last week, Monday, and I did say the market is going to come this side and move all the way up, and this is where we want to take our entries at the reversal phase around that price. All right, so eventually what did the market do? The market came to this price over here. All right, market came to this price over there, and then we went all the way down. We came to that price 91750, which was the equilibrium of that consolidation there, and then we dropped to the downside from here. Boom, our TP was where was it? It was at 9099, so it was somewhere around 90900. Where was it? Somewhere around here. All right, so the market came all the way down from that point, and we can see we hit our take profit. All right, All good, all good. All right, let's move on to our next. All right, so now we're going to discuss key levels. One, the most important, foundational, fundamental ingredient of my strategy is what I call round numbers or key levels. All right, some other people call them psychological levels, others call them double zeros and triple zeros. All right, I call them key levels. Why do they call them key levels? Because this is where the key to my successful trading lies. All right. Just a joke right there, just a joke. But yes, these are very important. Why are they important? All right. If you want to understand round numbers, let me give you a bit of a background. All right. These are known as psychological levels because of something psychologists call the round number bias. All right. Think about it right now. How many times do you see something selling for $98 and you say it's $100? Right? Why? Because as people, we usually round off to the nearest 10, the nearest 100, or the nearest 1,000. Are we together? Do we all agree that we all round off to the nearest 100, the nearest 10, and the nearest 1,000? Are we together on that one? We all understand that as individuals, if I go into the shop and I see something selling for $980, I would say this is selling for $1,000. Why? Because I'm rounding off to the nearest 1,000. All right. So similarly, that's the same thing in the market, right? And we understand that the market is where buyers and sellers meet. All right. Any market, be it the stock market, be it the financial market, be it the market at the mall, it's where buyers and sellers meet. And one thing that we all have in common between buyers and sellers is what? Price. We all want to know price. How much am I selling it for and how much am I buying it for? All right. So same thing applies to the big whales in the market, right? So whenever buyers and sellers are waiting in the market, they want to know how much am I going to buy the Nasdaq stock for, how much am I going to buy the Dow Jones, or how much am I going to sell the Dow Jones for, or how much am I buying the Euro USD or the USD JPY. All right. Now you'll understand by what we discussed that people generally round off to the nearest 100, the nearest 1,000. Similarly, the big market makers or the big whales in the market, they don't want to be buying Nasdaq at 11,198. They will round off to the nearest 100. They will round off to the nearest 1,000. All right, and that's where they place their orders. All right, this is where the big whales place their orders. You'll understand once we get to the charts. All right, when I start placing them, you'll see this is usually where reversals happen. All right. All right. So an example of double zeros will have 11,200, 11,300. Let me just quickly go on the chart. Let's quickly open Nasdaq. All right. I've already marked most of them over there. All right. Are we together? Let's just delete those. Delete those over there. See, this played out so that the market eventually broke out, and this was last week again. The market broke out of that as indicated. It went up to almost that price. Do you see that? Came back to test that area of consolidation over there. All right. Do you see this played out exactly how we discussed last week? Isn't that beautiful? If you were here last week, you'll remember we discussed this. And look at where price was. 15,200. Let's look at the reversal, the midpoint. All right. We're going to look at the 150. Let's look at where 150 was. All right. 150, which is our equilibrium. See, the market reversed exactly at that equilibrium over there. Isn't that beautiful? That's where you would have taken your buy entries. And if you are in the Telegram channel, we did send the Nasdaq buy last week. I believe that was last week Friday, and it shot all the way up in our VIP signals. See how beautiful that is. So again, let's go back to key numbers. So you see 15,600, 15,500, 400, 350, 200, 300, 200, 100, 15,000, 14,900, 14,800, and so forth. Now you'll realize, but when we go into history, you'll see the market reverses at these key levels, or the market reverses at these prices, right? Or near these prices. Near these prices. Do you see that? Whenever the market reverses or there's a big reversal in the market turns around these prices. So do we understand what key levels are? And Clive, you were talking about support and resistance. We use price, these key levels, as our support and resistance. We can quickly go to USD JPY as well. All right, let's quickly go on a 30 minutes time frame quick, and then let's see how price moves or reverses near these key levels. Look at the prices: 34,200, 34,100, 34,000, 33,900. Look at that. You see, whenever price gets to this, whenever the market gets to these prices, there's usually an indication. Look at our first turning point. That was 32,300, exactly where the market reversed and shot all the way up. All right, this was somewhere in October. Imagine if we had caught all of that move. Isn't that beautiful? Isn't that beautiful? Can somebody confirm with me in the comment section if you are still with me on this? You understand what round numbers are, you understand what key levels are, and as I said, example of triple zeros is your 12,000, 33,000, and so forth. All right. Here are some concepts that you need to understand. All right, about psychological levels. Price will tend to reverse near RB numbers or near key levels. Price will tend to reverse near or on the key levels. Number two, not every key level will cause a reversal. All right. Number three is price will generally swing or run to about three. How far back in history should I look for key levels? You don't have to go back into history. You just plot them. You just plot the prices, and however far back you go into history, you will see that market respects those prices, because as I said, you need to start thinking like the big worlds. You want to start thinking like the market makers. You want to start thinking like the people that move the market. Where are they going to take their orders? Where are they going to sell the market? Where are they going to buy the market? And we understand that whenever people buy, they buy based on price. And whenever people sell, they sell based on price. So going into history is just basically understanding price action. But already, if you understand phases, all right, if you understand phases, that we're going to have a consolidation, we're going to have an expansion, then we're going to have a retracement, then we're gonna have a reversal. You don't have to go far back into history. You'll just plot out your key levels and current markets. Are we together? The same thing that I did over here. I understand that I have a consolidation over there. My key levels are already marked over there. So I'm waiting for a breakout to happen. I'm waiting for price action to happen. And then boom, wherever price goes, I will go with it. But I understand that the market makers will want to buy between these two prices. You see, 1.92300, 1.92150, and let's look at this low over here, and I'm sure we can have 1.900. 1.9100. See, that's where I want to start looking for my sells and my buys, depending on where the market breaks out into. All right. So I want to combine this also with other price action patterns, with reversal candlestick patterns. We want to look at all of those things as well to get a confluence to make a better trading decisions. All right. To make informed decisions. All right. So we understand that not every RB number will cause a reversal. Price will generally swing about 300 or 400 pips in a trend. That is our price range or the expansion phase. And then price will generally go 1 to 2 RB numbers in a correction or a retracement. That is our retracement phase. Most of the time, it might go the same pips as the price range to take out liquidity or to fill the imbalances. And then boom, it will go into that direction of the intended trend. All right, thank you, understood. Thank you, Clive. Thank you, Clive. All right. As I said, you can use this as support and resistance, all right? Bringing back RB numbers to familiar technical analysis territory, they can really be thought of and used as another form of support and resistance. When price falls to a round number, it can act as a support. When price rallies up to a round number, it can act as a resistance, all right? Traders can use RB numbers along other type of support and resistance formed by previous highs and lows, Fibonacci retracement tools, or trend lines to find a confluence of support or resistance at a price level. It's more about the psychology. Exactly. It is. That's why we refer to them as psychological levels. All right. As much as the market, is so complex, it is still individuals that make the decisions in the market. It's not just computers only. So if we understand how people think, then we have an edge into making better trading decisions. That's why we refer to them as psychological levels. And the concept is simple. People generally round to the nearest 10, the nearest 100, or the nearest 1,000. The same applies in the market. If Nasdaq, I'm just quickly gonna go onto Nasdaq. Let's quickly look at on Nasdaq or Dow Jones. I'm just quickly gonna remove everything over there. All right. I'm gonna take a simple turning point. Let's go on a 4-hour time frame. Go back into history. I'm gonna take a turning point. Let's look at that there, and then I will show you where my nearest RB number 35700. Look at that. Already, by me understanding that whenever price gets to a key level, market will react. And what do we see here? The market got to a key level, there was a reaction because the sellers were waiting to sell from that price. Let's quickly go to where the market reversed to the upside. Bang. Let's put that line there, right? I'm going to open that 580, 600. That's my key level, 32,600. Bang! What do I see? The market has been coming down. It got to a key level. The buyers were waiting to buy at which price? At 32,600. This is where the buyers were. The big whales in the market. Bang! They took the price up all the way to 35,700. And at 35, we went down. We can go again. We can go again to another. Let's look at that one over there. All right. See, we can do 650. See, now this is the 50s. Look at that. Look at that nice touch over there. Look at that reversal over there. So even if you entered here, the market came, your drawdown was so little. Why? Because it's price. The market, the buyers bought at 28,650. We can go back again into history. We can go back again to where the market reversed. We can go as far back as 1990 whatever and look at where price was turning. Let's take this one over here. Bang. See? 25,100. This is where you want to take your entries. Look at that. That's what we call a snapper entry. The market reversed were exactly there. So now when you mix this with what? With key levels, right? And again, let me just show you something of what we just discussed now. See, we had a consolidation. We had a consolidation. We had an equilibrium, all right? We had an expansion. We had a retracement. And then we had a reversal to the downside. This is where you might have taken your entries. Boom, to the downside. You see that? Eventually, the market didn't go all the way down. The buyers came in and pushed in. And let's see where the buyers came in. 750. It's as simple as that. So if you start looking at price and start thinking like that, look at that. Do you guys understand how these key levels work and the importance of the key levels? Look at that. 750, the market shot all the way up. Eventually, invalidated that setup over there and went to the downside. But imagine if you're taking yourselves from here all the way down to there. Look at how many pips that is. You guys see, And again, even from here, let's look at that, right? 600. See, exactly. This is where the buyers were looking to buy. Bought all the way up. Let's look at that 10 over there. So putting this with all, let's look at 400. See, at 400, the market shot all the way down. Right. So the idea is that people buy and sell based on price. And that's what we also want to do. We want to buy and sell based off price. Are we together? Are we good? Are we good? Are we good? Do you have any questions? Do you have any questions? All right. So we understand that we need to determine the direction of the trend, right? We determine the direction of the trend, and obviously we may have the consolidation phase. All right. Number two, we wait for price to swing in the direction of the trend. All right. When price swing in the direction of the trend, that's what we refer to as what? As the expansion phase. All right. We wait for a correction to begin after a high. All right, wait for a correction to begin after a high in an uptrend or a low in a downtrend near a round number or RB number or key level. This is what we call the retracement phase. You wait for the retracement phase and then take your entries at the retest of your RB number in the direction of the trend. This is your reversal phase. This is where now the market is reversing to the direction of the trend. All right, and that's where you take your entries at the RB number or near the key level or the RB number. Right. Right. So, price cycle with key levels. When price expands and creates inefficient price action, plot your nearest key levels, your 50s, your 100s, and your 1000s near the breakout of the area of consolidation. We remember consolidation phase. You wait for a retracement near your key level, execute your order in confluence with other price action patterns or candlestick patterns. It's as it's as clear as that. Trading made clear. All right. All right. We spoke about identifying. We've already identified that. All right. Do we have any questions? Do we have any questions? Doesn't this mean that the market will be left open for days? Please elaborate on your question. I just want to make sure I understand the question, because the market, as we all know, or for those that do not know, the market is open uh, between Monday and Friday, 24 hours, 5 days a week. Monday to Friday, 24 hours, 5 days a week. And on weekends, the markets are closed. All right. So please, rephrase your question or elaborate on that. Do we have any other question? Do we have any other question? All right. We've already identified price cycle on a live chart. All right. Do we have any question? Do we have any question? Any questions? Any questions? While I drink my water, courtesy of Octa. Thank you. Shout out for the water bottle. Loving it. Drinking my water and minding my own business. Do we have any questions? Do we have any questions? We had a look at GBP AUD, what we are anticipating there, all right? What's the RB number? The RB number is our key level, so our key prices as we are identifying the double zeros and the triple zeros. This price over there. But if you did miss it, you can always rewatch this session. You can always rewatch this session after we are done with it. It will be loaded on the Octa YouTube channel. So please make sure that you do go back and relearn what we spoke about today. So please, again, guys, don't just listen to this and think you have it. Repetition, 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 Repetition of information. You need to keep repeating the information to you until you grasp it, until you understand it. All right. And then someone is asking, does the RB number work for gold? It works for each and every it works for each and every what you call instrument. Let's quickly go to gold. Let's open gold. All right. Let's open gold. All right. So now on gold, what do we want to? Let's quickly go on a 4-hour time frame. Let's look at the high there and look at what's our nearest 210 key level. 210. Let's look at our lowest. This is on gold. 1810. So now because of the price of gold, we won't use double zeros. We can use single zeros. 10s, 20s, 30s, 40s. Right? So we have 1810. Right? We can even go 1815. Just want to show you something. Let's quickly go 1815. So this will be our midpoints. All right. See that? Do you see that? Do you see that? All right. Let's go double zeros. Let's go. We'll go 19. So I just want to show you guys as a double zeros will be 1900. All right. 1900. Just want to see. Let's see where that lands. Look at that. Look at that. Look at that in history. Price is reacting to that. The market is reacting to that price over there. That's a double zero. We can do 1850. Let's do 1850. So you can just see where it lands us. Bingo. What happened over there? Let's go back into history. 1850. Let's just zoom out. See, whenever the market gets to that price, there is a reaction. See, whenever market gets to these prices, there is a reaction all the time. You guys see that? We can do 2000, which is our triple zeros. We can do 2000. Bingo. Nope. Nope. 2000. Let's look at that. Look at that. Whenever the market gets to this price, there is a reaction. Do you guys see that? Shoyebo Babajide, do you understand? Do you see that it works on all? You can take out any we can even go to Bitcoin. Let's go to Bitcoin. Let's see what's our it's even cryptocurrencies. 900. Bam. Look at that. 24,900. Just look at that. Look at that. Look at that. Look at that there. Right? Let's do 24. Let's do 20. Let's do 27,000. Let's do 27,000. $27,000. Remember, I said people buy based on price. See that? See the reaction? See the reaction? Do you see the reaction whenever price gets to those key levels? Right, let's look at where the market reversed. 38,000. Bingo. Look at that. Does it make sense? Does it make sense? All right. You can take any pair. We can take, I don't know, which other, it works on everything. Let's take USD CHF. Let's go, let's check the highest point. Let's see what was the price there. All right, 924,417. I'll do 400. 00. Price reverses at key levels, key prices, because people buy based on price. 85, 550. You can do 550 there or 500 or 5561. Let's do 600. Okay, nope, it doesn't. Let's look at that. Do we have any other questions? Do we have any other questions? Any questions? Any questions? Do we have any questions? We can see over here we had our consolidation phase over there, right? We had an expansion, we had a retracement. Let's look at where this turned. Let's look at the key level. It didn't go to the equilibrium, but 89500. Right, okay, let's do 600, which will be the top of the consolidation there. You see, consolidation, expansion, retracement, reversal to the upside. All right, so now we want price to continue to break this high over there to continue to show us that we are continuing to the upside. Any more questions? Any more questions? Any more questions? We need to think forward and not backward. Yes, we need to think forward. We need to anticipate, okay, this is price. Buyers and sellers buy at these key levels. Okay, again, we also need to go back into history to confirm, because remember, in trading, history repeats itself. All right, history repeats itself. And like I said, there's always price cycle. So you always want to look at that. You want to look at these key levels. All right, and just always think, if I was a buyer, if I was a seller, I would buy at these key levels. All right, and then you buy at the key levels or you sell at the key levels. But price action is important. You don't just buy. So for instance, if we go here where I said you should have bought, we want to look at price action. What price action are we getting over here? Okay, so we have an inverse head and shoulder. From what I see, we have a left shoulder, we have a head, we have a right shoulder, and then the price went to the upside over there. So you see there is a bit of price action. If we go on a higher time frame, we have an engulfing over there, right? Exactly at this key level. So you always want to combine key levels as well as other price action confluences. Look at that. We have an engulfing, market went to the upside. On a 1 hour time frame, we had a bit of an inverse head and shoulder over there, and the price, it's even more visible here. We have a shoulder on a 30 minutes. We have a shoulder. We have, let me do that. And if you want to understand price action patterns, there is a course, there is a webinar that we've did discussing this, all right? So you can go back always into the Octa YouTube channel and start looking at those previous webinars that we did. So we have a left shoulder, we have a head, we have a right shoulder, and the market broke the neckline, right? Price broke the neckline over there, right? And then bingo, market went to the upside. All right, does it make sense? Does it make sense? Okay. So I gave you guys an extra 20 minutes because we started a bit late today. So if you don't have any questions, let's get back right to it. I did say that at the end of this session, I'm going to give you guys a promo code that you're going to use to double up your deposit. All right. Remember, to take advantage of the promo code, you need to do these 5 steps. 1, you need to open your Octa trading app or visit the official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate, make a deposit and enjoy your bonus. And the promo code is Isaac Edu, Isaac EDU. That's Isaac Education, but we go Isaac Edu. So make sure that you use that promo code to get your 100% deposit bonus to increase your profitability. And remember to join the Telegram channel for more trading ideas, for more free educational content. The link is in the comment section. Please make sure that you engage with us over there. We discuss all things related to Forex. From me, guys, I do appreciate you guys for joining me today. You're I hope that you'll never see trading the same ever again. You'll start having better entries from today going forward, because that was my intention, for you to start having better entries in your trading. So remember, price cycle. If you understand price cycle, we have a consolidation phase, we have the expansion phase, we have the retracement phase, and we have the reversal phase. And we also use price levels or key levels or RB numbers, where we take our entries. We take our entries near the RB numbers or at the RB numbers, in confluence with other price action patterns as well. All right, so that's it from me, guys. Do enjoy the rest of your evening. We already done with the questions. Do enjoy the rest of your evening. I will see you on Thursday. We have a live trading session on Thursday, live trading session on Telegram. So make sure that you join the Telegram link. We're not going to do it on YouTube. We're going to do it on Telegram. So make sure that you join the Telegram session. That's where we're going to be hosting the live trading session. You don't want to miss out on that. All right. And again, next week, Monday, 7 p.m. Central African time or South African time, we're going to be having another webinar. All right. Another webinar where we're going to be discussing more details concerning Forex trading, making sure that you get the right education for you to be successful in Forex trading. All right. I wish you guys all the best for the week, a profitable week ahead. We had a great profitable week last week. So make sure that this week you are profiting with us. Don't be left behind. I don't like profiting alone. I want to profit with everyone. So make sure that you join the Telegram channel and let's all profit together. Let's have a profitable week. That's it from me, guys. Much love.